In this lecture example, we are now going to look at how to calculate employees' tax. Now, before I start this, just a quick reminder, you will see that the tax rates and the rebates used in this example is not correct. They are the tax tables and the rebates that I provided at the beginning of this document, ones that I've invented. Focus on the principle, guys. In the exam, you need to use the latest tax rates, which will be provided to you. You can also find it in your Psycho Student Handbook if you have the latest one, but they will provide you with it. This changes every year, so you never ever study this. You need to be able to study the principles because every year it will change. So understand how to do it like that. Then, let's now start talking about it. In this first example, I'm going to show you the calculation of employees' tax. There will not be any annual amounts. Remember, annual amounts are things like a bonus, which is not something that you receive all the time. It's a once-off amount or what you receive not on a regular basis. In this case, I'm showing you a taxpayer is younger than 65. If a taxpayer is 65 or older, the only real difference is that the Section 6B credit, part of it can be considered for this. And also, obviously, there will be things like the secondary rebate. Okay, now, what's important for you to understand as a student is that, remember, the person who is performing this employees' tax calculation is the employer. So the employer will only calculate it on the remuneration that they pay the employee. So things which are not in your remuneration will not have employees' tax. If this employee or this taxpayer earns income from another employer, then that other employer will have to do the tax calculation on that remuneration they pay. So if you, for example, work for employer A and employer B, employer A can only calculate employees' tax on what employer A pays you, and employer B can only calculate the tax on what employer B pays you. Right, not that it's very common to see that in exams, but let's see what to do. Okay, so you'll see then, before I read the question, I ask you to calculate the employees' tax for the month of March, for the entire year of assessment, and for the period of March to June. Now, these are all working exactly the same way. I've only tried to include it here to show you that there are different ways of asking it, and I've also included to show you there's even different ways of calculating it, depending on what you prefer. So what I'm trying to say to you is that you'll see that there's lots of different approaches, or a number of different approaches, not maybe lots. You can play around, find the one that works for you, but you need to do it when you do these practice examples and not for the first time in the exam. Right, then you'll see also here in the suggested solution. Before I start, I'll remind you, I've got a bit of information here. The fourth schedule tells us how to determine employees' tax. It tells us that we calculate on remuneration that the employee receives from the employer. And paragraph 2.4 tells us how to calculate the balance of remuneration. And that's what the employees' tax is based on. Right, so I'm going to say here, you can either calculate the different employees' tax using the monthly amounts or by annualizing it, grossing it up to a year. And you'll see that in year, I'm going to use the monthly method. And over here, I'm going to use the annual method. They won't tell you monthly method or annual method or anything like that in the exam. These are just words that I've used now. But just to this monthly amounts and annualizing, there will go. All right, so let's actually start reading it. It says, Mr. A is employed by A Limited. He is 60 years old. He earns a salary of 50,000 rands a month from A Limited. So that's remuneration. Right, let's call it REM. That means there's employees' tax on that. Mr. A is also entitled to a travel allowance of 6,000 rands a month. Now that is remuneration, but what is remuneration? Only 80% of that, remember. So 6,000 times 80% is 4,800 rands a month. They then tell you Mr. A maintains an accurate logbook and he can prove that he travels exactly 5,000 kilometers each year, of which each month, of which 3,500 of a business. So if I say 3,500 over 5,000, it gives me 70%. That's not 80%. If that was 80% or more, then instead of using 80% here, we would use 20%. But that's not the case. All of this information about the logbook That has nothing to do with the employer. They won't do it. That's why this is the only thing that the employer will do. So all of this information about the kilometers traveled, the cost of the car, the fact that Mr. A pays for fuel maintenance, all of that is ignored by the employer, and this is all we do. Mr. A then earns 2,500 rands a month from his ABSA bank account. This is not remuneration. So the employer will not calculate on that. Mr. A is obliged to contribute 8% of his salary to the A Limited's pension fund. We will calculate this, I'm going to just say here, PAYE. It's not remuneration, but we're going to do this as part of our calculation of the balance of remuneration. That's our deduction that we can get. Mr. A further contributed 2,000 rands per month to a retirement annuity fund. Okay, now you need to be careful, because now your employer does not do this. So you need to provide proof to your employer, and your employer then needs to agree to take it into account. Your employer doesn't have to do it. Maybe they don't have the system to do it. In this case, I say Mr. A contributed 2,000 rands a month to RAF. He provided proof to his employer and requested the employer to take into account. And A Limited agreed. So we will also deduct this from our pay as you earn in our calculation. Then A Limited contributes 1,500 rands a month to Mr. A's medical aid. This is a fringe benefit, and a fringe benefit is remuneration. Okay, so I'm just going to make it shorter there, but it's remuneration. So we will calculate employees' tax on that. Also important for you to understand is that now, because A Limited is making the contributions, they know that Mr. A belongs to the medical aid. So they can take into account medical credits like Section 6A when they calculate it. They say Mr. A provided A Limited with proof of payments that this was made and requested A Limited to take into account, and A Limited agreed. You don't even have, in this specific case, that wouldn't even be necessary because A Limited contributes this. So basically what the whole idea here is, and it's the same as with this RAF, is the employer is not paying it, but the employer can take it into account if they are aware of it. In this case, where the employer is paying it, the employer obviously is aware of it, so that's why they can take it into account. Right, then see the next one. Mr. A fell ill in October and incurred 60,000 rands in qualifying medical expenses that were not covered by the medical aid. Mr. A submitted proof of this to A Limited and requested A Limited to take this into account. Can you see there's nothing about A Limited agreeing? And even if A Limited did agree, they can't do it. This has nothing to do with employees' tax. This has to do with Section 6B. But you'll remember Section 6B has two parts to it. It starts with medical aid contributions. Then you say less, in this case, 4 times Section 6A. Right? Then plus qualifying medical expenses. Right? Less 7.5% of a taxable income, and that amount times 25%. This story, the employer cannot do, because it only the employee can do it, the taxpayer. If the employee was older, than 65 or older, then the calculation would be this medical aid less 3 times Section 6A, right? And that amount times 33.3%. If the employee is 65 or older, this part of the calculation, the employer can take into account for pay as you earn. Okay, but it's only for those employees. Right, so let's look at it now, guys. So the first thing we have to do is we do it for the month of March. Okay, so what I want you to see is the following in part A. Here I've kept everything per month. So the salary is 50,000 rands a month. Can you see there? 50,000 rands a month. Right, 50,000 rands a month. The travel allowance 6,000. 80% of that is travel allowance. Is remuneration. Can you see there, guys? I'm only including here, so what I'm trying to say is I'm not saying here at the moment 50,000 times 12. Because if this was the month of March, let's say you are now the employer and you are sitting in the month of March, you would have to do this because this is the only information that you have available for you. You know we've paid them 50,000 rand so far this year. Right, so there's the 50 travel allowance. The interest, can you see, is nothing because it's not remuneration. There's the medical aid fees fringe benefit. Right, this gives us this 56,300 rands. Now that is all remuneration. We then do our retirement fund deduction. This is what you usually call Section 11F, but we're not applying Section 11F, we're applying paragraph 2.4 because we're looking at employees' tax. So we take the actual amounts, the pension and the RAF, but only if the employer agreed to it or is aware of it. There we go. So that's 6,000 Rand per month. Now, this is limited to the lesser of. What is our limits usually when we do Section 11F, guys? Our limits are usually limited to the lesser of 350,000 or 27.5% times the greater of the remuneration or the taxable income including CGT, or our third limit is the taxable income excluding CGT. You'll recall that. Now, this is what you and me will do when we do our taxes for the end of the year. The taxpayer does. When the employer does it, I want you to understand the following. The employer does not know what your taxable income is. So this line over here is out. This line over here on the 27.5% times the greater of is out. So it'll only be the lesser of 350,000 or 27.5% times the greater of the remuneration. So I want you to see over here, it's limited to the lesser of 350,000. I'll talk about that divided by 12 here, or 27.5 times remuneration. Now, why am I dividing it here by 12? I'm dividing it there by 12 because we are looking at it for 1 month. It's not 350,000 Rand a month, it is 350,000 for the year. So that gives us the monthly amount. Right, so our lesser is 29,167 or 27.5% times remuneration. Remuneration is that subtotal that you've calculated. So the lesser of these two is 15,483. We still can't deduct more than our actual contributions, so we deduct 6,000. So all of this, guys, pretty normal stuff. Just see that it's now per month. Okay. So now I want you to see, now we've calculated this total over here, 50,300. That is our balance of remuneration. Now this is what we would usually want to call our taxable income, but it's not taxable income because it's remunerations, the employer doing it, and also it's for 1 month. So we don't call it that, but I want you to see it's equivalent to that. Now, our tax tables that we use are set out in terms of a year. So this 50,300 is for 1 month. So we then say, okay, let's assume in March that every single month for the rest of the year, this is what you're going to earn. Even if it's not the case, guys, we know it's not always the case. But in March, this is the assumption that you make. In April, you will do this whole calculation, and whatever this amount is, let's say it's 60,000. You will then say in April, let's assume it was 60,000 for the entire year. Right, so you just perform this calculation as follows. You've calculated that, then you multiply that amount by 12. This gives you how much that would be for a year. You then go to your tax table, your primary rebate, and secondary rebate, and tertiary rebate, all of those are applicable. Section 6A, right, if the employer is aware of the fact that you're contributing to a medical aid. Section 6B, if the employee is 65 or older. That gives us the tax that we expect for the year. So then the tax that we expect per month, we just divide it by 12. So it's basically the opposite of what we did over here when we annualized it. And that is the employee's tax for the month of March. This is how much would be withheld on the employee's payslip. Okay, now I want you to see, the next one says, what is it for the entire year of assessment? Now, I've deliberately put this in here just to show you, right, how it would be different. Now, you can do this in two ways. You could even do part B in this exactly the same way as what we've got here. Right, see that net normal tax for the year? Let's see how we would get it. So I'm going to show you now. So this is now part B. So here's our salary. So here I've multiplied by 12, multiplied by 12. You'll see I've done everything here by 12 just to show you the different alternative. Look at the pension fund deduction now, limited to 350. Can you see? We don't say divided by 12 here because everything is for a year. Right. So 603, 600. Look here. 603, 600. It's the same as that amount we calculated in the previous one under the annualized amount. Calculate all tax, and this is our net normal tax for the year. Right, 145,936, 145,936. So that is what it would be for the year. Again, if you want it per month, you would divide it by 12 and you get 12,161. There you go. I want you to just see, if you look at part A and part B, that's what I said here. See that it's exactly the same, guys. It works out the same. You can use whichever one you want in the exam. Right, and then C, what is it for March until June? So March, April, May, and June, 4 months. Okay, so what do you do, guys? In this case, what I've done is I've decided also to do it on a monthly basis. Everything is 1 month, can you see? Everything is the same. Everything's the same. Everything's the same here. We annualize it. We get the tax per tables. We deduct the prior rebate. Sorry, spacing is a bit out there. We do our section 6A. That gives us it for the year. So 145,936. Remember that, guys? That's the same for all of these so far. We then divide it by 12 to get it per month and multiply it by 4 to get it for March, April, May, and June. 4 months. There we go. That's how much you would calculate it. All right. Then in the next example, it is exactly the same information as in the previous one. So it's exactly the same information as that we saw over here. The only thing that I do different is in December, he now gets a bonus of 250,000 rands. And I want you to see how we do this. Okay, so first question is, you are required to calculate the employee's tax for the month of March. Now what I want you to understand is in the month of March, this was not paid. We don't know anything about that bonus. So in March, you just do whatever happens in March. So here we go, everything on a monthly basis, same as the previous question, and I want you to see it. 12,161, which is exactly the same. This is example 2 looking at now. I'm taking you back to example 1. Right, this is our first example. In the first example, this is also what we got per month. Why is it the same? Because in March of both years, this person earned the same. Then I ask you to do it for December. Okay, so now I'll see what happens. When you do it for December, it's important to understand. Okay, if I take you back to just part A quickly here. Can you see here, we take this balance of remuneration and we multiply it by 12 to get the annual amount over there. You can't include the bonus here, right? Because then everything would now be 250,000 more expensive, higher. Okay, so let's say 306,300. 306,300. Because then, 306,300. Because then over here, if you do that, you're going to multiply that 250,000 rands bonus by 12 as well, which doesn't make sense because you only received it once in the year. So you can't do that. So what do we do in B? I want you to see, guys, and you can go and try. I know what students will often say is when you first approach this, you might think that there's a shorter way of doing it. If you think so, prove it to yourself first before assuming that. There is no shorter way. Okay, this is how you do it. It's not often asked in tests because it's lengthy. Okay, see how we do it. The first thing that you do is you calculate what the employees would be excluding the annual amount. The annual amount is the bonus. Now, it's exactly the same here. Okay, I just want you to see, here's the bonus. I've made it null. It's exactly the same. Look at these amounts. 50,300. Look at that balance of remuneration. 603,600. Guys, can you see it's still the same as what we've had all along? Okay, 603,600. Okay. You calculate the tax with tables, rebate, all of these things as normal. Right. See here, 12,161. Now, this is still part of the same calculation. We re-perform the calculation, but we include the annual amount. But now what is important for you to see here is you have to start at the place where everything has been annualized. See that 603,600? You start with that, 603,600. So that's why you have to first calculate separately. Then you add the bonus to that. This gives us a new balance of remuneration, 853,600. We can calculate our tax per the tax tables on that amount. There's our primary rebate, section 6A. This gives us a net normal tax of 246,308. Okay, now I want you to see. the difference between the 246,308 tax, and if I take you guys back up to where we excluded it, and the 145,936. So see what we see. The tax for the year, excluding the bonus, and a tax for the year, including the bonus. The difference between that 100,372, is the tax on the bonus. So that is the tax on this 250,000 rands. Now you look at it and you say that's a lot, but let's just say 100,372 divided by 250. Right, and it is a lot, but I want you to see here it is 40%. No, 40.1%, which is close to that 41% over there. So we know we're kind of in the right bracket. Remember, it will never work out exactly like this because this is an effective tax rate. Okay, so then I want you to see, so that's a tax on the bonus. So follow now closely. The tax on all of the amounts without the bonus is 12,161. The tax on the amount, only the bonus, is 100,372. So those two together gives you the tax that was withheld in December. See then, guys, if the question had to ask you to do it for the entire year of assessment, what is the employee's tax for the entire year of assessment? Then you don't have to split it up like we did. You can then do everything for the year. I want you to see, look, there's the 250,000. Right? Balance of remuneration is now higher. Calculate the tax on that. 246,308. That was the same as in part B. The total amount. This is the tax, if we say the employee's tax that will be for the entire year, this is what would be calculated. So why have I shown you these different ways? I've shown you these different ways to show you different things that they can ask you. You just need to put yourself in their shoes and say, what are they asking me? They're asking me only for December, only for March, for the entire year, and then do it appropriately. Right, guys, and then part example 3. This is again exactly the same question, including the bonus. But what I ask you to do here is to calculate the taxable income and not the employee's tax. So why have I done this? I've done this so that you can compare the different solutions. Right, so what I want you to see, for example, I'm just showing you quickly. If I take you to example 2, part C, where we did that for the entire year. Look at our travel allowance. Alright? But when we look now at example 3, how do we do our travel allowance here? We do this whole big travel allowance story with the tax rate per table and so forth. Because that is how we do it for taxable income. For employees' tax, we just multiply it by 80%. What is also different in part A of question 3, our interest is included. Our interest is included. Because now we don't just do remuneration. So what I want you to see is, example 3 here, this is everything you've been doing so far before studying prepaid taxes. This is what you've been studying so far this year. So this, you will definitely see in the exam, this is a question. I've just included it here because I want you to be able to compare and make sure you see the difference between employees' tax and taxable income and balance of remuneration. Right, also just see that I ask you for his tax liability, and I just want to show you here in the end. When you do the tax liability, there's a taxable income, tax per tables, primary rebate, section 6A, section 6B, and over here, the employee's tax that was deducted during the year, that gets taken into account. You've already paid tax on that. So guys, exactly the same as you've seen so far. Make sure you compare these different examples to each other. The idea behind these 3 examples, for you to compare one situation asked in different ways, including some things. And part 1, there's no bonus. Part 2, there's a bonus. And in part 3, I ask you taxable income instead of employees' tax. I want you to take the time to compare these different methods. If you feel like you've got a different method of trying to do something, try it. But remember, your answer must be the same as my answer. So sometimes in the past when I've lectured, I've had it many of times. This part here, in example 2, we ask you the month of December. Students always think that this method I'm doing here, where you exclude it first, do everything, and then you include it, do everything, is the longest way and it's a shorter way. Challenge yourself to try and do the shorter way, but you must be able to get to this amount there. Sometimes students will say to me, I think there's a different way of doing it, but I get a different amount. Yes, then you are wrong, unless I've made a mistake here, which is not the case, hopefully. Right, so guys, compare these different examples to each other, and that is employees tax.